Why is the US dollar rallying up? You can say it's because of the whole Middle East conflict or whatever. That's completely fine. What I've been calling out for many, many months now is this weekly demand, which we have seen many reactions off of to the upside. More importantly, this monthly demand zone. I'll show you guys here this weekly zone from back here. And then that weekly zone is embedded inside of that monthly demand zone. So that is why we have pushed up, in my opinion, on the US dollar. Obviously, fundamentals do have something to do with it, I will admit, but I trade what is real, which is what is zones. I don't try to predict based off of news events and economic data. I think we could easily push up to weekly supply at 103.06, and that is where I think we are most likely headed. However, on the daily chart, I will show you what is possibly going to happen. And I will say right now, I will remain bullish on the dollar as long as this demand zone is holding. So if you throw a channel tool on this trend line right here, you can see we are actually pretty overextended as we are piercing above the channel right now. So I think next week we actually could see a down week, a red week in the DXY, pushing towards that 50% mark and even lower towards that trend line. I will still be bullish though. A pullback and an uptrend is healthy, guys. We have to take that into consideration, okay? So I think we could see a pullback below the 50% mark, even towards the trend line, and continue to see a rally up. What is also possible is we break this trend line, and then from this trend line to this demand zone right here, I will be bearish on the dollar. Not super bearish, not ultra bearish, where I'm like, oh my God, I got to short the dollar. But if the trend line breaks, that is definitely a sign of weakness. But I think it just means we're going to be pulling back down to this daily demand at 97.88 and then refueling for a bigger push to the upside. It's kind of like when you're on a plane and then you have to stop somewhere to refuel because it's a long flight up, or not up, but up in this case. But hopefully that analogy makes sense. That is where I think we could be headed if we do break the trend line. So these are some possibilities I'm seeing here on the DXY. Could price continue to rally up? Sure. Are we due for a pullback? Technically. But just because we're due for a pullback doesn't mean we're going to get it. But I'm just pointing out that this channel, this trend is pretty overextended right now. So we could expect to see the DXY have somewhat of a down week this week. And even on the 4-hour chart here, you can see the 4-hour trend line is looking pretty good, but we are so overextended, right? We're above the 50% mark. So we easily could see a pullback towards the mean again, and as far as the DXY goes. So I will be monitoring the 4-hour trend line and the daily trend line. And then if we break the daily trend line, it's possible we pull back down to that daily demand at 97.88 to refuel from possibly that push up to the weekly supply at 103.06. On to the forecast for the euro US dollar. Look at the weekly chart here. We have clearly lost momentum here as we have pushed below the low here, looking pretty weak on the euro. Ultimately, I think we will be pushing down to this weekly demand at 1.09, and we will talk about that in the weeks to come here. But as far as what I'm seeing, that is where we're most likely headed. We actually have somewhat of a support area right here, some sort of liquidity, as I like to call it. And that's where I think we could be headed. Why I think we will hesitate here, maybe even see a rally up, is because of the daily chart. Let me just show you guys here in a moment. So if we look at the daily chart, I've been talking about this daily demand for quite a while. It's a very good zone. It removed a supply zone. The move away is fantastic. And what makes it even better is we had a clear area of support here, which to me shows me that there are stop losses here. And what I think we have seen a very aggressive pullback into the zone. Usually makes me pretty uncomfortable, but I think that we are just targeting stop losses here aggressively. I'm not saying it's on purpose, but that's what I think is what we are seeing here. So I think we could see some bullishness here on the euro to push towards that trend line again. And I think we will most likely be falling from that trend line. So how do we go about and trade the euro right now? Well, when we are inside a daily demand zone, we typically want to look for confirmation on the 1-hour chart. So that is what we could be doing. And let me show you guys exactly what I will be looking for. So on this 1-hour chart, you have a beautiful downward trend line, picture perfect. So if we break this trend line, any 1-hour demand zone there, that is going to be our confirmation trade. We don't want to just hop on the trade now, unless you enter on a daily chart, which I doubt. We want to wait for confirmation. And if you don't know what confirmation is, check out my full course here on YouTube. It's free. It's over an hour and a half long. Tons of valuable information in there. But a brief explanation of it is we want to see a change of character, a change of direction, whatever you want to call it. I call it confirmation. So push towards this trend line and a break would be fantastic. But we're not just looking for a break. We are looking for a demand zone formed by breaking the trend line. And then that will be our confirmation trade on the euro. But before you just hop on that trade and maybe you think we're going to get a massive trade, maybe you think we're going to target the high over here. I personally don't think that's going to happen. So as far as trade management goes, if again, we got to get the confirmation, if you get in long at that zone, I'm thinking a 1-to-1, 2-to-1 trade. At most, target that daily downward trend line. But I wouldn't be greedy here. I wouldn't be trying to target the high. I wouldn't be looking for 5-to-1 trades here. I think if we get the confirmation, we get a demand zone, we get in long, you could be hybrid with trade management as well. Meaning if you get a 1-to-1 move, you can move your stop to break even with hopes that it's going to go even higher than I think. Keep moving your stop loss up with price. You don't just have to take profit. There's so many ways to manage trades. You guys got to start experimenting with these things. So that is what I'll be waiting for, is confirmation on the 1-hour chart. And look, if we continue to fall down, we break that daily demand, then I didn't take a loss. You didn't take a loss either. That's the beauty of confirmation. There's pros and cons to everything, but that is what I'll be looking for here on the euro US dollar. And on the 4-hour chart, a nice 4-hour downward trend line with a supply zone sitting above at 1.16. I was looking for a pullback up to that supply right here. We didn't get that, unfortunately. It is what it is. Sometimes you just don't get it. Maybe I should have drawn my zone a little bit smaller, but I felt comfortable drawing it like that, and I didn't want to change it. Now that the daily demand's in control, a pullback up to the supply is a pretty aggressive trade. And why is that? Well, because a daily demand zone, which is in control, is much stronger than a 4-hour supply. So I was thinking this trade was going to be a nice trade to the downside, very high risk to reward trade. But since the daily demand's in control now, if we do get a pullback up to that supply, we have to be aggressive with trade management, meaning don't get greedy. Don't look for a massive trade. If you want to trade short at this zone, I think it is a high risk setup, but I think it could be good for a 1-to-1. Move your stop to break even after a 1-to-1. Move your stop to break even after a 0.5-to-1 because the daily demand is in control and it's stronger than the 4-hour area of supply. The higher odd situation, though, is to trade with the higher time frame zone on the daily chart. Again, we're waiting for confirmation on the 1-hour chart by removing the downward trend line and hopefully leaving us with a nice 1-hour demand zone for a quick risk to reward trade. On to the forecast for gold. Everybody knows gold has been on an absolute tear lately. Pretty volatile market here with everything going on in the Middle East. We are seeing somewhat of a die of momentum here. And look, long term, I think it's possible gold even retraces down to 3,500. I know nobody wants to believe that because everything's just going to go up forever, right? But it would really be a healthy pullback towards before we started to get that rally. And that's where I think we could be headed long term. Obviously, that's pretty long term, so we'll have to see what takes place. But that's where I think we could be headed. As far as trading gold now goes, let's look at the daily chart here as we do a full top-down analysis. You can see we are clearly losing momentum here. We push towards this rally-based drop. Not a zone as far as my chain analysis goes, but clearly reacting off some sort of previous selling here. And what I think we could be seeing is maybe a retracement down to this trend line and maybe see another reaction off that trend line. Certainly a possibility. As far as trading gold goes now, we have a few options. We don't have a trend here on the 4-hour chart, but what we do have is a pretty good 4-hour supply above at 52.75 with a great area of resistance before. So I think if we get a reaction off this resistance area again, that shows me there are stop losses here, retail stop losses, and that will make that supply zone even higher odds. Again, with everything going on in the Middle East right now, I think being aggressive with trade management is much, much preferred here, meaning don't try to target the low. Don't look for a 5-to-1 trade because gold is very volatile right now because of the whole situation in the Middle East. So we don't need to see a reaction off this resistance area. We could literally just shoot up, and I still think it could be a good trade. I just prefer to see another reaction off this resistance. It gives me more confidence in that supply zone setup with potential stop losses above that resistance right into our supply zone. So move your stop to break even after 1-to-1. Bump your stop loss up with price. Look to take profit. Don't target a massive trade. And you have to be okay with something like this happening and you getting out here. You have to be okay with that. That's the whole thing about trading psychology. But I think that's the better move, is to be aggressive with trade management. And that is what I was telling members here on this 1-hour demand zone. This 1-hour demand zone here, nice move away, remove supply. We saw a nice reaction off that demand zone, a quick one. It was a quick trade, called out ahead of time. in the daily market breakdown video, which you can see on the screen now. And I was telling members, you have to be aggressive with trade management off of the zone, meaning don't get greedy. And look at them. They listened. They literally listened, and they got a quick profit off the zone before it blasted right through. That's the value of the membership. And again, this trade was called out, and I was telling the members, you got to be careful. Look for a quick one. And this was all called out in the daily market breakdown video for the Diamond members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. And as far as trading gold goes now, again, we have that 4-hour supply zone above, but we also have a very nice downward trend line on the 1-hour chart. It's basically picture perfect. But when we throw a channel tool on this trend line, you can see we are pretty overextended to the downside. We are well below that 50% mark. So if you're a day trader trading the 5-minute time frame, I think it could be worth it waiting for a push above the 50% mark, more towards the trend line, and then continuing to look for shorts on the 5-minute time frame. I think that would be completely reasonable as far as the 1-hour chart goes. So that's what I'd be doing if you were a day trader. If you were a swing trader, we have that 4-hour supply zone that's above, or if we remove that trend line, any demand that removes the trend line, it's going to be good for a quick little maybe swing trade on the 1-hour chart to the long side. So as far as gold goes now, we have to watch that 1-hour downward trend line and the 4-hour supply zone that is above. Moving on to the forecast for the S&P 500. And please, guys, hit that like button and subscribe. I don't run any mid-roll ads because I know how annoying it is with, ads in the videos and then mid-roll ads. So I turn those off. So if you guys appreciate that, hit that like button, subscribe if you are new to the channel. Much, much appreciated. As far as the S&P 500 goes, I am not surprised we have seen somewhat of a pullback here as we are floating above that channel here. Now we are pushing towards the channel. I think it's very possible we see even pull back down to 60.50 here, down to our weekly demand zone towards the 50% mark of the channel. So I'm really not surprised to see somewhat of a pullback here in the S&P 500. You can see on the daily chart we have clearly lost momentum, and we actually have a daily downward trend right now, which is actually pretty rare in the S&P 500 and in all the indexes. It's a pretty aggressive downward trend, I will admit. We don't even have a trend line it's that aggressive. Nice reaction off of our supply. You can go back and watch my previous forecast. I had the supply zone on my chart before it took place. That's the beautiful thing about subscribing to my channel is I call all these things out before they take place. No hindsight, P&L, BS, or Lambos or any of that. So it's a good reason to hit that like button and subscribe, guys. Really appreciate it. So we are pretty overextended at the downside right now, I will admit. But as far as trading it goes, we don't have a lot of zones, I will admit. This zone back here, all these zones are tested on the 4-hour chart, and they're very, very old. This zone, we blasted right through it. This is one of the ones I was calling out, and it broke right through, unfortunately. So just trying to be transparent here. But clearly, we are sitting at the low here. So trading the S&P 500, pretty aggressive right now. We have a couple options, though. If you're a swing trader, if we push up, if we break that trend line, any demand there on the 4-hour chart, that's going to be a decent little demand zone pullback. But we're not just going to buy now, right? I don't really see any demand down here. So we're not just going to buy. We're going to wait for a break of the trend line to prove there's demand here. Then I think looking for longs is a much higher odds situation on the S&P. What you could also be doing is watching this 1-hour chart. You can see 1-hour downward trend line here holding pretty well. And if we throw a channel tool on that, we are right at the bottom of that channel. So shorting right now is definitely not higher odds. But if you're a day trader, if we push above the 50% mark, push towards a trend line, anywhere in here is going to be good for shorting on a 5-minute chart. And if we break that downward trend line, any 1 hour demand zone there is going to be a nice confirmation trading setup as well. So if you're bearish, wait for pullbacks towards those trend lines and you can continue to look for shorts. And if you're bullish, we got to wait for these trend lines to be removed and let the banks show their hand and hop on longs if they create a demand zone for us to look for longs in. On to the forecast for the USDJPY. Looking at a weekly chart here, clearly targeting this resistance liquidity above. We have broken that high. Finally, we have broken out of this sideways, terrible market conditions on the yen, which means we have a new weekly trend line here. And I actually have to make an adjustment because that is not correct. And it will be from here to here. So this is a very nice weekly trend and it's sustainable. But it doesn't mean we're just going to continue to go up. We could easily push towards this trend line and then react to the upside. Like I've been saying, if you didn't watch my DXY forecast at the beginning, you got to watch that. But a nice weekly trend on the USDJPY. I like a trend, but I also prefer when the trend has a trend line with it as well, because they are two different things here. What I think we could be seeing potentially happen, I don't know about this week. We'll have to watch the DXY, but we have a daily demand zone down below at 156.15. That demand zone is responsible for targeting liquidity and breaking opposing supply. So a pullback down to that daily demand could be great for swing trading. And I know many of you don't look for, a whole daily zone with an entry and a stop below. So if we do get a pullback down to there, we will be looking for confirmation on an H1 chart. But I'm just saying we are going up almost in a vertical line. So a pullback on the yen down to that daily zone is certainly a possibility. How do we go about and trade the yen right now? Well, I'll be honest with you, I'm not really seeing a whole lot of zones. However, we have nice trend lines to the upside. A beautiful 4-hour trend line here. If you guys go back, you can see I did call out that supply zone. That's that red circle there. Quick 2-to-1 trade off that zone a couple weeks ago or last week. And beautiful trade. When that supply was removed, we did create a 4-hour trend line. What do you notice? We are very overextended. We are sitting above the 50% mark here of the trend line. So a pullback below the 50% mark, more towards the trend line, would be good for looking for longs on a 15-minute time frame. Unfortunately, I just don't have any demand zones here to point out. But that's what I try to do here. I don't point out low-quality setups. I'm pointing out what I literally would look for trading, and I just don't feel comfortable drawing any zones. On the 1-hour chart, you can see I just removed that line. That was the opposing high. That's what I was looking for. So if you're trading like the 5-minute or the 1-minute chart, this is the trend line you want to have in your charts. From here to here, draw it exactly that way. As long as this trend line's holding, we could be looking for longs, like I said, on a 5-minute or a 1-minute time frame. If we throw a channel tool on this trend line, my bad. Let's go back to the H1 here. If we throw a channel tool on this trend line, you can see we are pretty overextended here as well, sitting right at the pretty much the top end of that channel. So we have to be patient here on some of these pairs. We got to wait for pullbacks. Will you miss out on a trade here and there waiting for a pullback? Absolutely. But it's just being more conservative with your capital. And that is what I think we need to be doing here on the USDJPY. Longs are certainly preferred, especially now that we have a weekly trend and a daily trend, 4-hour trend, 1-hour trend. Longs are definitely preferred, but we want to wait for pullbacks. And let me be very clear, if we break, looking at the top right screen, if we break this 4-hour trend line, to me that's going to show us maybe we're going to pull back down to that daily demand at 156, 115 that I was talking about earlier. So I will be monitoring this 4-hour trend line to determine if we will be pulling back down to that daily demand. Alrighty, on to the forecast for the GBPUSD. What do you guys notice here? We are breaking below this weekly trend and trend line. Definitely a bearish sign. I'm not calling this removed yet. I'm not going to get into detail here on the forecast. I'm not calling that removed yet. But a break below this is definitely a bearish sign. However, we've seen so many times where we just do this, we shoot right back up. That's why I'm not calling it removed yet. But it's pretty bearish in my opinion. It's definitely a bearish sign. So just wanted to point out that on the weekly chart first. On the daily chart, we are into this daily demand. And this is the demand zone I've been pointing out for a while. It is kind of old, I will admit. But we definitely could be looking for a long trade. And again, since we are bullish on the dollar, I'm not saying we're going to see a move all the way up to daily supply. I'm not saying we're going to see a massive move off of this daily zone. But since the daily demand is in control, we can look for confirmation on the H1, just like we will be doing here on the Euro US dollar. So how do we go about and do that? Well, on this 1 hour chart, we have a 1 hour trend line here. We are very overextended to the downside. So if we do get a pullback towards the trend line and we break that trend line, any 1 hour demand zone there is going to be a nice potential confirmation trade on the pound on the H1. So we're very overextended. We don't just want to buy now. Could it work out? Sure. It's pretty aggressive to be doing so because we're kind of just catching a falling knife here. And price could easily just shoot back down. Are we due for a pullback? Sure. Doesn't mean we're going to get it. So that's what I'd be looking for if you're a swing trader. Being patient, waiting for that 1 hour trend line to be removed. And if you are bearish, this is our 4 hour trend line we want to be looking to short. However, we are very overextended. We're below the 50% mark. So if you are going to short, you want to wait for above the 50% mark towards that trend line, and then looking for shorts on a 15-minute time frame could be reasonable. But again, the daily demand is in control. So if you are going to short with this downward trend line, we have to be pretty aggressive with trade management here, meaning don't get greedy. Move your stop break to break even as quick as you can. 1-to-1, 2-to-1 take profit makes sense because of the higher time frame demand zone that is in control. But if we break that daily demand zone and then we get a pullback towards the trend line, then I think looking for higher risk to reward trades to trade with the 4 hour downward trend makes more sense on the pound. Alrighty, on to the forecast for the USDCAD. And if you guys are struggling with trading psychology, check out my Stoic Trading Psychology podcast. Just released a new episode last week. You guys are definitely going to love it. I have a YouTube channel for it as well, and it's available anywhere you get your podcasts. Check it out. Let me know what you think about it in the comments down below. On the weekly chart of the USDCAD here, another reaction off of our weekly zone. This was a tested zone. We already tested it, came back in. I mean, we've tested the zone technically once, twice, 3, 4, 5, 6 times. So there's clearly a lot of demand down here. And again, I was calling out the zone before it took place, before you can go back to my forecast back in October 2025. And downward trend line here is potentially coming into play. But I think we easily could push up, target this weekly liquidity, push up to this weekly supply at 1.39. That is definitely a possibility. We do have a daily downward trend line that is coming in control again. And look at the beautiful reaction off of our daily trend line. Our trend line is drawn from here to here. This is a reaction off of our properly drawn trend line. Clearly reacting off of the trend line again. So a break of this high here would be a pretty bullish sign. At that point, we will have a daily upward trend, which is going to be pretty significant. So if we break that trend line, we might have a demand zone here. I'll have to see. And that demand zone is going to be great for potential swing trades. So as we push up and we're closing above the trend line here, it's looking pretty strong. And again, why are we breaking this trend line potentially? Well, because the weekly demand's in control. So how do we go about and trade the USDCAD? Well, we have a couple options here. On the 4 hour chart, we had a nice 4 hour downward trend. That 4 hour downward trend was removed by this demand zone at 1.36. So if we do get a pullback down to that demand zone, that would be our potential pullback entry long. I'm not in love with the demand zone personally. I personally will be avoiding the zone. It just qualifies as a move away to me, so I personally will be avoiding it. And I wouldn't fully avoid it if I was a day trader. I'm not a day trader, I'm a swing trader. So if you're a day trader, if price pulls back down to that 4 hour demand zone, confirmation on a 50-minute chart would make more sense rather than just an entry, stop, and take profit above, because it's a pretty mediocre zone. I like that I removed the trend line, but the move away is not that great. So that's the beautiful thing about day trading is you can capitalize on these zones still and look for confirmation. Instead of me, I'm not going to take this entire zone. So it's a decent zone. It's not horrible. It's not great. That's why I think confirmation on a day trading time frame on a 50-minute chart makes more sense here on the USDCAD. And on the 1 hour chart, we are reacting off of this 1 hour supply zone. I was pointing out the zone before. I didn't like it anymore. It's very old. And when it's very old, I like to see a liquidity trap before. We didn't really get a reaction off of it. So I personally avoided this one as well. I think we could see maybe a small move since we're so overextended to the downside. But if you are bullish on the USDCAD, you think there's no way we're going to fall, Kevin, we're absolutely going to go up. That's reasonable because of the nature of the weekly demand and control. So if we do remove that 1 hour supply, if there's a demand zone here, which there is right now, but well, actually there isn't right now. We need to wait for that supply to be removed. But basically what I'm saying is any demand that removes that supply, that's going to be a good little 1 hour demand zone there. That's what I'll be waiting for here on the USDCAD. On to the forecast for the Aussie US dollar. what do you notice? We are reacting off of our trend line. Again, we are reacting off of so many trend lines in this forecast. It's actually pretty interesting. It is the first reaction off of our daily trend line. Pretty aggressive pullback into the trend line. It's possible we maybe pull back down to that daily demand at 0.677, but it's definitely a bearish sign. But it's kind of bullish as well because the trend line is technically holding, but it's kind of the first test. I want to see where this next candle will open and where it will close, obviously. But the trend line is in play right now in the Aussie. Why I think we could maybe pull back here is, again, I'm bullish on the dollar. If we break that daily trend line, where I think ultimately we could be headed is down to this weekly demand at 0.674. It's a great demand zone. Removed a proven area of supply. The move away is very good. The basing is very tight and good. So I think that's where we could be headed. It makes sense. Supply and demand zones act as magnets. That's where I think we could be headed. And then we'll talk about long trades if we do get down to that weekly demand zone on the Aussie. As far as trading it goes now, we have a couple options. Full transparency. This was a losing trade right here. I personally avoided this one because of that wick, but this was a trade I was calling out for the members, and that was a losing trade. So just wanted to be transparent here. I'm not trying to act like we only take wins here like a lot of these fake trading gurus, so just wanted to be transparent. But what I'm also being transparent was this crazy win we had on the Aussie. I personally didn't catch this entire move, but this zone was called out ahead of time. You can go back and watch my forecast for evidence of that as well. So winner, loser, that's the power of risk to reward. When we remove that daily demand, this 4-hour demand, we were left with a 4-hour supply zone above at 0.712. So if we do pull back up to that 4-hour supply, I think it could be good for a short trade. As far as trade management goes, it's kind of tricky to tell how aggressive and non-aggressive to be with trade management, but it's a decent zone. The move away is pretty good. It removed a demand zone. So if we do get a pullback up to that supply, I think it could be good for a 2-to-1 move. I really do. So that would be our supply zone for a short trade on the 4-hour chart. And again, if you don't feel comfortable with just an entry stop loss, you could just look for day trading confirmation in there. If you are a day trader, if you're a swing trader, don't look for a swing trade. That is one option on the Aussie. Our other option is this 1-hour downward trend line. So if you are a day trader, we have a nice 1-hour downward trend line right now that is in control. And as long as that trend line's holding, 5-minute time frame shorts are going to be good. We do have a demand zone down here I was pointing out before, but this zone is pretty old now. I'm not super confident in the zone. Do I think we could see somewhat of a small move off the zone? Sure. I am personally avoiding it because it's just so old. Could we see a move? Sure. I'm avoiding it. If you're a day trader, 1-hour downward trend line is going to be our guide for day trading shorts. And if we remove that 1-hour trend line, to me, that's showing me maybe we're going to pull back up to that 4-hour supply above at 0.712. All right, moving on to the forecast for the USD Swiss. We are into our daily supply at 0.788. It's a great supply zone. I mean, the basing is nice and consistent here. The move away is pretty good. Removed an opposing area demand that was very, very proven demand. It's a great zone, but I actually think we're going to be blasting right through it. Maybe not blasting, but I think it will be breaking, which I'll show you why here in a second. So I think it's possible we do see a move off this daily supply. Certainly possible. But why I think we could be breaking through it pretty easily is because we have a weekly supply that's sitting right above it. The weekly supply starts, going back to the daily chart, the weekly supply starts about here. So I think it's possible we do see a deep pullback, hit that weekly supply, and then drop, which will look like this daily supply is being respected. But ultimately, it will be respected because of the weekly supply. Look at the move away, remove the demand zone. Pretty good zone. The only issue I have with this weekly supply is if we zoom out, get a bigger perspective, we are extremely overextended to the downside here. So I'm not saying we're going to get a massive move off the zone, target the low. I just think we're more likely to see a move off the weekly supply rather than the daily supply. So that's what I think we could be seeing here as far as the USD Swiss goes. This was a 4-hour supply zone trade. That was a pretty decent setup, really, because it was inside the daily supply. Unfortunately, here on Friday, we actually wicked right through that supply zone. So I will have a little bit of chain analysis to do here. Let's see. So we remove that supply, and I really don't feel comfortable pointing out any area of demand here that removed it. Technically, it would be this zone down below that removed that that 4-hour supply. It's just pretty far, but technically that is the zone. So it's looking pretty good right now as far as longs go, but look at this. Look how overextended we are. We're well above the 50% mark. pretty much pushing 75%. So if we do get a pullback below the 50% mark, more towards that trend line, I think looking for longs on a 15-minute time frame could be pretty reasonable here on the USD Swiss. But we have to be mindful that the weekly and the daily supplies, or the daily supply is in control, the weekly supply is so close that, you can look for longs, but don't be greedy. Don't look for a 5-to-1 trade. Be aggressive with trade management. So that's what I'd be watching here in the USD Swiss, this 4-hour trend line, the daily supply, like I said, that weekly supply that's sitting right above. But I don't think we're going to see massive moves. I think we'll just most likely hesitate, small move, before we end up breaking to the upside. All right, moving on to oil. This is just an awful looking chart. I mean, how do we even make any decisions off of this? This is like the craziest thing I've ever seen as far as a chart goes with definitely the craziest 2 candles that I have personally ever witnessed in my 6 years of trading. Trading oil is going to be very tricky right now. I actually don't recommend it. I was telling my members, if you're going to trade oil, you got to be aggressive with trade management. So I was actually pointing out this supply zone. I personally avoided it. I'm not trading oil right now because of the craziness. But that's just a great example of when times are crazy, you want to be aggressive with trade management. So if I did take this supply zone setup, which again, I was pointing out to the members, I would have been stopped out at break even most likely, maybe a 1-to-1 take profit hit, depending on if I was awake or not. So just a great lesson on risk management there. You got away with murder there if you did put your stop to break even. So that's definitely a valuable lesson here in trade management, guys. As far as trading oil goes now, we have a nice 1-hour trend line to the upside. Let us throw a channel tool on this trend line. It shows me that we are at a decent point to actually continue to look for longs as we are sitting below the 50% mark. We are pushing towards it, but if you're bullish on oil, 5-minute time frame longs are going to be good right now due to the fact that we have a nice trend line to the upside. Don't get greedy though. Again, oil, definitely crazy. As much as we could see it go up because of the conflicts in the Middle East, we could see it tank too. So if you're bearish on oil, we have a 4-hour supply above at 101.39. Again, I really don't recommend trading crude oil. For the first time ever in my trading, my forecast here on YouTube for the past 5-6 years, I said I wouldn't be trading it, and I pretty much ended the forecast for oil. But we do have a good 4-hour supply zone above at 103.39. I think we do see a small move off the zone, 1-to-1, stop to break even as soon as you can, because we could see this thing go crazy again. Look at this mark. Look, it's absolutely insane. But I do like the zone. Single candle basing, very nice explosive move away, followed by another explosive move. So I think it's a decent opportunity to see move to the downside. So if you're bearish, that would be our supply zone for a short trade on crude oil. But be very, very careful. If you are going to trade it, I actually recommend, again, being aggressive with trade management, but also trading with less risk as well, meaning instead of risking 1%, maybe risk 0.5%. All right, last but not least, we are on to the Bitcoin forecast. So we broke this weekly demand. Didn't really worry me too much because we had the overall monthly demand that was in control. Nice bullish candle here on oil or on Bitcoin as far as the weekly chart goes. Certainly possible we retrace back up to weekly supply at 89,380. The better supply is actually sitting above at 141. Obviously, we are seeing somewhat of a nice pullback here on Bitcoin. As far as where we're headed, it is tricky to tell. Not really seeing too much supply on the daily or the 4-hour that could really hold up price. On the 4-hour chart, we did get 2 beautiful moves off of this demand zone. This one was a little surprising to me, but nice moves to the upside. Certainly looking strong. We are pretty much reacted off that high there. Not really much to trade off of here on the 4-hour chart, I will admit. But if we do push down and we break that 4-hour demand zone, since it's a very proven area of demand, any 4-hour supply zone there is going to be pretty good for potential shorts on Bitcoin. As far as trading it goes now, we have a very nice 1-hour trend line to the upside. Feel free to copy that properly drawn trend line. And we're sitting very close to the trend line. So if you like to day trade Bitcoin, you're in luck. Nice trend line to the upside. 5-minute time frame longs are going to be good as long as this 1-hour trend line is holding. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.